SIRC of ICA welcomes you all to the today discussion on Union Budget 2025. Uh, SIRC of ICA very happy to introduce today's speaker T.N.C. Sridhar IRS. He's a BSc graduate in microbiology and also a advocate, practicing advocate at Karnataka High Court, Taxation Council. He held the positions like Joint Commissioner of Income Tax, Standing Counsel for Income Tax Department at Karnataka High Court, Member Regional Direct Taxes Advisory Committee, Government of India, Chairman at Income Tax Department Employees Cooperative Bank Mumbai, Chairman at Maharashtra Employees Cooperative Bank Association Mumbai, Director at Brihan Mumbai Cooperative Banks Association Mumbai. He also served Income Tax Department at Mumbai, Bangalore, Tumkur, Hubli, Mangalore, Udupi, Panjim, and Madagan, Goa, in various capacities as Inspector, ITO, ACIT, ADIT, DCIT, DDIT, JDIT, and JCIT. Experiences in various formations of the income tax department, such as administration, acquisition, assessments of corporate, non-corporate, salaries, and central circle, intelligence, investigation, prosecution, and training. He worked as a special member core group of investigation of stamp scam and assessment of stamp scam cases, 25 appraisal reports of searches conducted on various types of businesses to credit, associated with training since 1986 as a faculty at various training institutes of both inside and outside income tax departments, guest faculty at various educational institutions and forums such as Chartered Accountant Association of India, Ballios Association of India, Lions Club, and Rotary Club. He is also a speaker and panelist in All India Radio and various Bangalore-based TV channels. Are known Tamil, English, Hindi, Marathi, Gujarati, and Kannada, bit of Konkani and German also. For this introduction, we welcome today's speaker, T.N.C. Sridhar, sir. Welcome, sir. Over to the speaker.
Thank you. Welcome. First of all, I should thank SRIC for giving me an opportunity to interact and talk on this budget, which has been recently given by our Honorable Finance Minister. Actually, a lot of expectations were thinking, but the question is that a lot of things have been happening in the past 10 years. So as such, not much of expectation I myself was having on this, except for a little adjustment, because already in this 2024, when this budget came up, quite a few things have been brought in. And this time it was not a very big thing. Major things were not expected. But one thing, the very important thing that she has mentioned in this is that she's going to come out with a new tax law next week. So I think that time we will have a more in-depth of what things are going to come. This is something like direct tax law code, which was in the offing for so many years, that may try to take a shape by introduction of the bill next week. And of course, after it gets into it, it pass through the parliament, it will take a lot of time, but maybe its effect will come next year. But as far as the current year is concerned, the major happy news for all the middle class basically is the increase in the rate structure. That is the what we call as the up to 12 lakhs, they say there is no tax payable. It's not, that means for a common man, he thinks that up to 12 lakhs, he did not have to pay tax. But it's not really so, because the rates are also there. Up to 4 lakhs, they have given the exemption beyond that. But considering the fact that there are so many things that is going on, this particular increase is not that much contained with the inflation rate. I normally feel that your basic exemptions will have to be on the little higher side, at least to compensate the inflation rate that is going on. Normal income inflation rate is about 5%. And on that, if the things is going on, then of course we have we have an effect of that. But as far as the taxation structure is concerned, because many people think that income tax is something, is a burden and all. Actually, everybody pays taxes on that. The basic concept people don't understand is that income tax is based on the earnings. It is not on your spending. While the indirect taxes is on the spending aspect. You spend, you pay tax. If you don't spend, you don't pay tax. But am I audible? Am I clear to all of you? Okay. Thank you. So when you earn more, you pay taxes. That's all. These are the structures that is there. But what happens for a common man? Actually, the income increases on the basis of the inflation rate. And if the upper limit is kept constant, what happens with that? We normally walk into the structure of the taxation structure, and it is quite burdening at that point of time. So keeping all these things in view, a lot of things have been brought into that. Now, actually, I feel that this so many amendments that has come in, about 85 amendments that have come into this act. And actually, when the finance minister speaks, in fact, I always keep telling people when I give a talk and all, there are three documents one need to understand before we try to understand the changes in the budget itself. Number one is that what the finance minister speaks in the parliament. When the finance minister speaks in the parliament, she only speaks the basic text of that. That only gives a broad idea to what the budget is about. Then when you actually go to see the complete document of the text of the finance minister's speech, when you see the text of the finance minister's speech, it has got the annexures, which give the further breakup of the things that have been spoken by the finance minister. Now, what happens whenever any amendments keep coming in, whenever introduction comes in, the question goes into why this particular thing is happening. Now, that is where the next document that comes into existence is the explanatory note. So when you see the explanatory note, then in that case, you try to understand exactly why these particular amendments have taken place. I will not be going section to section wise because I had a feeling that the type of the program that will be held will be that there will be other indirect tax people will be speaking, and then I will come on. Then questions will be put on which I'll be able to go ahead with the answering part of it. That's it. But just to make you aware about, because you all have heard the budget, you all have got some queries in your mind. And when we comes up with that, even now, I cannot say with very positive thing that whether I'll be able to satisfy all your queries. But it's a question of exchange of our thinkings and the perspective of each of us have in a particular case as such. So that will be a better part of going ahead with the program. Anyway, now coming to the finance minister itself, this particular budget is more focused on how to put more money into the people's hand so the money can be spent. It's a spend-oriented budget rather than earning-oriented budget. For senior citizens, some care has been taken to see that this particular their national savings scheme, that was the scheme which was there, which was not taxable in the beginning. But when it actually they get on maturity, it was getting taxable. That has been removed. So they are able to get an exemption on that whole thing, especially beneficial for the senior citizens. Rate structure, everybody seems to be fairly happy about it. But actually, when you work out only, you will come to know exactly as to what is the real benefit that one has got in this particular aspect. Now, not certain procedural things have been made, changes are there in that, they have been brought into that, certain modifications have been made. But I don't see any major change that is going to come in this budget because the new income tax is being brought in. Very briefly, the finance minister mentioned that the number of sections are going to be halved. But if number of sections are going to be halved, now whether subsections, clauses, subclauses will increase, whether the size of the income tax act will reduce or not, that is anybody's guess. That can only come when we actually go into the whole aspect of it. Because I've been dealing income tax since 1976, and I've been in the talking to people since 1986. 1976, I joined the department. Right from 86, I'm talking about the Income Tax Act. It's the most logically organized section where it takes care of every aspect. Now, I think slowly we are moving into the area of removing the exemptions and also the deductions, reducing part of it and making more of income oriented. So, in fact, a few years back when this new regime was introduced, the query came up that, oh, now the new regime has come, there is a less tax structure and one regular old scheme you go, you pay more tax and all. But actually, when one will sit and work in case-to-case basis, they will exactly know what the position is. Because the deductions were taken off, very many people, as a professional, you will understand these things. But when you have to go and explain to the common man, it becomes a little difficult to make them understand that there are three items which have to be taken out of your income. What we consider as income, we have to take out three items. First, we take out the exemptions, section 10, 11, and 12, 13. And then we take internal deductions out. And the external deductions are the ones which are giving incentive oriented. Now, slowly the incentive oriented things are being taken out. In this budget, the FM is speaking about the tax rate of the new regime. She has now talked about the old regime. Whether old tax structure will remain as it is without any change or not is not clear at this point of time. So only when the further things clarifications will come, we will know whether the old tax regime will continue as it is without any change, and only the new tax structure will come into effect in respect of the new tax regime. When you talk about new tax regime, that means there are deductions are not available, whether you are taking out those things and all. So now this 87 which has been talked about, where the tax liability will be given as a rebate, will be taken off. That is, when you have up to 12 lakhs income, whatever a tax you have to pay, that much will be given as a deduction. Of course, there is a benefit of marginal effect that is there, that is being taken care of in this aspect. So that is why even for salaried persons, 12 lakhs extends to 12 lakh 75,000 because the standard deduction is still available to the salaried employees. That particular thing is there. So these are the certain calculation things which have to be seen in depth of this thing. Okay. So now even certain procedural changes have been brought in under section 132 in respect of retention of books of accounts, and certain time limits have been extended in respect. You see now when this with the data consolidation, data mining that has taken place, whenever a person files a return, certain aspects are left out by that person. Now, whatever has been left out, that particular thing is brought to the notice of the person by way of a notice that these are the things which you have come across. Please examine this and whether you can amend the return. Now, this amending time limit has been extended from 2 years to 4 years. So that up to 4 years, a person can amend without getting any damages of any punishment or penalties on that regard. These are the aspects that has been brought into the whole thing. So now as a representative, you have your own difficulties. When SSG does not disclose certain details to you, you cannot make it part of your return that you are filing. You are not responsible for it. But what happens, the SSG thinks that, oh no, I have already disclosed this thing, that thing and all. And another very important aspect that is there, these tax structures which is there, that doesn't talk about the tax levy, special tax levies like capital gain and other tax, they're dealt with in 115 area, 112 to 115, wherever special rates are mentioned, those special rates are not touched by this tax. It's only a general tax structure that is taking place. So if a person has got a capital gain, definitely the entire thing will come. This person is not going to get any benefit out of it. These are the few aspects of the rate structure is concerned. Okay. Now, with that, these are a few points which I could call out in this short time available in this point of time. In that case, I would like to start an interactive session so that when you will raise a query, then we can go ahead and make it more meaningful. Because it will not be right to chronologically go from section 2 to the last section where whole thing is dealt with and all those things. Rather than if you are able to go focus it on a particular topic as to how this particular thing will go on, then we'll be able to understand this whole thing. So with that short introduction to the whole budget that has taken place, because FM mainly major time she hardly spent 5 to 10 minutes on the income tax part of it, not beyond that. In a almost 1 hour, 15 minutes talk that was there. So you can say 75 minutes talk, hardly 4 to 5 minutes was there for the income tax. Only this much came up into this thing. Okay. So with that, I request the other thing to come out or raise your points so that we can discuss it on that and make it more fruitful to you. Thank you.
The office can facilitate members who have connected online or members present at the Brahmaya Hall. You can ask them to ask a question. so that there can be some interaction for the next 5-10 minutes. And then the floor can be open for the next speaker also. Yeah. Members who have connected online, if you would want to have a query, you can just put your raising your hand the thing so that the moderators can enable you. You can enable your voice also. Sir, we have around 59 participants who have joined online.
Okay.
And then I think another 30 to 40 people present in our Brahmaya hall there in person and who are watching you.
Yeah.
So, Ratnavel, can you just update?
Pardon?
I'm just asking my office people to give us an update. Yeah. Yes.
Sir, good evening. I have two questions in this budget. One is regarding the charitable trust. They have said certain exemptions, certain privileges are provided. Can you brief what are all the privileges relating to the charitable trust, schools, educations, clubs? That is the first question. Second is regarding the amendment they made 4 years. Is it a retrospective or prospective? Thank you, sir.
What properties? Can you repeat? What are the properties?
No. Charitable trust.
Yeah.
Previously 5 years, they extended to 10 years.
10 years, yes.
And they said that compliances are eased out. So what are the compliances they're eased out? Is there any retrospective effect or prospective effect? Just
Okay. Got it. You're basically trying to find out the effect of that increases the registration period validity from 5 years to 10 years. That's what you are trying to under implications of that. Okay. Now let me come to please sit down. And see, when charitable trust institution was made, in the sense is that normally when you understand the charitable trust is that it is supposed to carry out the charitable activities where what the government wanted to do. For example, I always used to put it like this, that the government has to build a hospital for people. But if someone says that you don't spend your money, I will spend the money, I will build a hospital for the people. So kindly permit me to do that. So an welfare activity that the government wanted to do, if somebody else is trying to do, then that person gets the benefit of the taxation and the person is recognized as a charitable institution. So when the charitable institution registers, but once a person started that activity, he is going to continue in that activity. Previously, he has to run every year to get the renewal of his registration. So what happened in the middle, they said, no need to, once they register, it is permanent, go ahead, no problem with that. But what happened, income tax is a dynamic enactment. So when they find that when you give an authorization to somebody, and we presume that that fellow will be carrying that activity in future in the right perspective. But when incidences come to the notice that once you give the registration, then the person is nicely working for 1 or 2 years. Later on, he starts misusing that benefit that has been given to him. So in that case, what happened, to keep a track of that, the department tried to get back that thing by putting a cap of 5 years. After 5 years, we'll renew. Now, as the experience that comes, the government has realized that no, not much of deviations take place. The people are sincere. They're carrying out the purpose for which the trust is created and for the charitable purposes. So there is no need to keep it for 5 years. We can extend it for 10 years and see how it works. Now, if people are working properly and going again, maybe government may come back with a scheme that once they granted, that is sufficient for you for the rest of the period also. So this is only a extension of the benefit which was earlier given open-ended, because some incidences were brought to the notice of the department that something has been not been utilized properly, so it need for restriction. So it was brought back to 5 years. Now it has been extended to 10 years. It's only a facility extended at this point of time. So that the charitable trust, once it gets a registration, it can it need not have to keep running to the department every year or every 5 years. It can wait for another 10 years. And if 10 years the organization is sustaining, it fairly gains its name and fame. And automatically the further registration can be extended for a further period of another 10 years also. That's the main, it's only a being a dynamic enactment, it is keeping its options open to see how slowly open the doors for giving a permanent registration for a charitable trust, which is being done by the people for the benefit of the common man. That's it. Is it okay? Clear for you?
Yeah.
Thank you.
Thank you, sir. Another is that apart from extending the period, any is out.
Can you keep the mic little nearer? I am not able to hear you. Yeah.
Apart from extending the period from 5 to 10 years, any
Yeah.
other provisions amended section 11 relating to the charitable institutions is my doubt.
No, see, primarily what you see, I have to go into depth of the whole thing, because see, when we have 85 amendment that was through, we have to go into the depth of the whole thing. So maybe I'll be going through that into the depth of it and all, because very short time available with me. With that, only this much I could catch up and I could tell on this. But any further depth is required, definitely you can communicate with me. I'll be able to clarify those things also the later part. Okay. Thank you so much.
Yeah.
Yeah.
Thank you, sir. Second
Yeah.
part is regarding the modification of the return,
Ah.
2 to 4 years. Is it a retrospective effect or prospective effect?
It will always be prospective effect.
Prospective. Thank you, sir. Thank you.
So anybody connected online also would want to ask a question, can unmute yourself and ask, please.
Sir, I am Gautam Kumar.
Welcome.
There was a proposal that there will be a higher TDS only on non-PAN cases. So previously we used to get higher TDS notices for short deduction 20% for inactive cases and specified person cases like that. So do we mean that only non-PAN, the person who is not having any PAN number will only be subjected to higher rate of TDS?
Yeah, got it. Now, regarding TDS, they wanted to rationalize the TDS and the TCS provisions, so that there are various number of rates are there and a lot of work is involved in that and all. So they brought in that, okay, in certain cases, if this much is there, only this much things has to be done. Sometimes you need not have to do that also. Now, the question of targeting the non-PAN cases is that those people are not in the tax bracket. As a prima facie, they are not in the tax bracket. It is not that every PAN holder is in the tax bracket. There are many PAN holders who are not in the tax bracket. I am not coming to that particular chapter. But people who don't have a PAN, they are definitely not in the tax bracket. So it is only to bring those people into the net. This particular provision has been restricted to that extent. So as far as the PAN is there, no issue. As per the provision which is there, you go ahead. But the benefit that is being given at this point of time will not be applicable to the non-PAN holders.
No, my question is, inactive PAN, we used to get TDS short deduction notices till now for inactive PAN.
Yeah.
Do we assume that for inactive PAN also normal rate will apply? Only for non-PAN cases, higher rate will be applied?
It is talking about non-PAN cases. It doesn't talk about active or inactive.
So till now we are getting notices for inactive PANs.
You can mention it. Okay,
Yes.
if you get a notice, you say that okay, they are inactive, all right, but they have a PAN. But the provision as of now, plain reading of the budget says it talks about non-PAN cases.
Okay. One more question, sir. Is there any TDS changes in as far as 194C TDS on contract is concerned?
Pardon?
Any changes regarding TDS rate on 194C contract, TDS on contract?
No, the provisions are very clear in the act. I'll, if you go through the section, what are the sections that is involved in that? That provisions are there. I'm not reading out the whole thing now, but it is there to say that what are the rates that is there, what are the provision that is covered and all. And they're rationalized. Number of rates are reduced to considerable extent. But the question is that this particular aspect, the particular section of the person whether it is covered or not, that will have to be seen from the budget paper itself.
Thank you.
Thank you.
Hello.
Another one aspect, yeah. Okay, Kishore Babu, start. Yeah.
Yeah. See, the amendment regarding the extension of time from 2 years to 4 years for updated return.
Yeah.
So is it for the 4 different assessment years we can do now, or for the one assessment year instead of 2 years we can do it anytime within the 4 years?
See, the question is that what does that thing comes when you file when a return is filed that for a particular year.
Yeah.
Now, in that year, when you file a return, you have got one first thing to rectify your mistakes is available under 139(4). That is there.
Yeah.
Now the question comes extension of that. If department finds some aspect which has come to the department's notice which the assessee had not disclosed, so he makes a rectification of that. He makes an amendment to that. Now that was in coterminous with section 139(4). That is up to the revised return timing only it was being maintained. Now a further time has been given further. Another 2 years has been given beyond that. So you can call it as, it is the extension of 139(4) in respect of the query that is raised by the department. Now 139(4) is a rectification that an assessee does it on his own. That is what is up for under 139(4). Okay, as by way of a revised return. But now where something is detected and brought to the notice of the SSC by the department, which may be right, which may not be right also. It's possible. For example, I'll give you one example. See, as I'll give you my own case example is that when I was a joint commissioner Madgaon, I had to open a bank account in respect of the department because the bankers were in Panjim and my cashier every day used to go to Panjim and come back, travel 30 kilometers up and down. So I told him, why you are traveling 30 kilometers, why you are taking cash and taking I'm talking about this about 12 years back situation.
Okay.
Now, of course, even otherwise also the cashiers keep running around. So I thought, why don't we make a bank account which is in our same building? So I went to the State Bank of India, requested, can you open a bank account? They said, okay, sir, we can open a bank account. So they opened the bank account in the name of T.N.C. Sridhar, Joint Commissioner of Income Tax. Like that, they opened a bank account. So it is a government account, in other words, for a convenient purpose that money used to be transferred from that account to this account, and then we used to disburse that. Now what happened? That account even today stands in my name, even though I retired 13 years back. Now suppose department culls out that particular account and sends it to me that this account you have not disclosed. Now I have every option to reply to the department that this is not my money which is lying there. Like I explained, every query that is raised by the department is not necessarily the thing which has to reflect as an undisclosed income of the assessee. It's not necessary. But if it is so, then the assessee gets an extension of the section which is something like 139(4) to another 2 years beyond that, where he can rectify and he can do that so that the penalty lenient view can be, or whatever is that level, penalty levels and all will accordingly be treated in par with that. He has accepted those things and he has put it forward and all. Now, pre-file returns, I was expecting the pre-file returns to come 2 years back itself. Soon, very soon, the pre-file returns will also come. Because whatever you are going to disclose, everything is there with the department. Department itself make a computation and send it to you. Possible. It's also possible in the days to come. That will come. So, yeah, go ahead. Please go ahead,
Yes,
Kishore.
sir, please proceed, sir. Yeah.
Clear?
Yeah, it's clear.
Thank you. Now, another query which I was expecting from people regarding the house property income. That is, earlier, only one property you could take it as self-occupied property to take it as annual letting value as nil. Now that facility is extended to 2 properties. Because people keep traveling, people work in different places, so they may have 2 different houses. So both may be self-occupied. Sometimes they will live here, sometimes they will live there. But as per when the earlier SO benefit was available only for one house, the second house they have to treat it as a market value, which was not necessary. Now that is extended by this budget. They extended that self-occupied property benefit to 2 houses. That benefit has come. Okay, go ahead. Anybody else? Sangmitra, anybody else is opening up?
Any questions from the people present? I think online there was no other person who had asked, but
Okay.
people who are present.
Yeah. Because right from afternoon, so many TV channels, so many people are giving their views and all those things.
Correct.
So what I thought was that, so instead of repeating all those in the section wise going on, let me make it more focused after giving a brief, so that the members who are attending, who are present here, will get enriched on that particular aspect. Now, if any particular aspect they would like me to enumerate, kindly they're free to ask me so that I'll be able
Yeah.
to.
I think members can also, if you're not unable to unmute or so, you can even post your question on the chat. The speaker would be able to read it out. Yeah,
Somebody
there is
raised
a
a
chat.
question, why TDS 194T is too low? No, I have no answer for the question why. Because it is a prerogative of the FM to put that thing as low. So it's not the burden. Is it not a burden on small firms? See, now the question is small firm or a big firm? Burden is a burden. Now, if a particular provisions
Yeah, please go ahead. You can unmute after the answer.
it's a statutory thing which is coming up. So when a statutory thing is there, if something has been in some wisdom, it must have been done. But this aspect of why it is low, that will be explained in the self-explanatory note when it comes. That particular circular should be coming very short. Previously, it would take 2 to 3 months, but nowadays it's coming very fast. And maybe in a day or two, that explanatory note will come, which will clarify that aspect as to why it has been kept at a lower limit. Maybe if it is lower, ultimately it may phase out also. That we'll have to see at that point of time. Okay. I think Priyanka wanted to come.
Yeah.
Okay.
Good evening, sir.
Good evening.
Sir, regarding the house property, where 2 self-occupied house property have been given as an exemption,
Correct.
I understand that the similar kind of benefit had come in 2019 budget as well. What is the difference between that and the current one?
Now, I don't see much. See, now what they are saying, what is the FM speech? She mentioned only this, that the benefit of without any conditions. Previously, I think some conditions were laid down for the second property, but now there are no conditions in that. Same whatever condition applicable to the first property, same thing will be there for the second property also without any distinction. I think while speaking, she made a small remark on that issue also. That she said that there were some conditional things, and but what conditions she has not spoken about it. But this is only to mitigate certain hardship that must have been brought to the notice in this regard. Okay. I think someone has raised a query on. Okay, thank you, Priyanka. Someone was raising on this same issue earlier. It was raised regarding inactive PANs. Okay. Someone is asking rebate on 87 years available on tax on short-term capital gain. Now, short-term capital gain is in par with other sections. Long-term capital gain is only enjoying a special rate. So I don't think short-term capital gain anyway goes in a different taxation structure. So it should be within that normal taxation rate. There should not be any difficulty on that. Yes, please.
So there is a question on explain the changes made in section 194 on TDS. It was Mr. Khandelwal who had put it.
194. It's like going to the whole section. I have to go on to that one. But I'll open up that part. $194, huh?
Yes, sir.
194. I'll come on to that. Seven. Yeah, in that 194, and come on section by section now. 194 193, amendment to 193, which says that being an amount, aggregate amount exceeding 10,000 rupees during a financial year, for which, for the 5,000 rupees extended to 10,000 rupees. 193, the quantum is raised from 5,000 to 10,000 rupees. In 194 also, 5,000 has been made to 10,000. 194A, the 40,000 has been increased to 50,000. Okay. And in 194B, in respect of single transaction, that is the word aggregate amount, the word single transaction shall be substituted by the word in a financial year. So it's not a one transaction, it is the total financial year, whatever that overall limit will have to be taken for the total transactions in a year. So when there are more transactions in a year, now whenever that transactions exceed a particular limit, then the provisions will start getting attracted at that point of time. 194BB, there also wherever the single transaction was mentioned, that has been taken to during the year. 194D, 15,000 has been increased to 20,000. That limit, 194D limit has been increased to 20,000. And even in 194G also like that. 194H also. 194I, rent credited for the month, part of the month by which the amount of account paid does not exceed 50,000 rupees. So if the rent is paid for a part of the month also, the total amount should not exceed. If it exceeds 50,000 rupees, then that particular thing comes into operation. Then 194J, that 30,000 has been increased to 50,000. And 194K, 5,000 has been increased to 10,000. And 194LA, the first proviso, 2,50,000 rupees has been extended to 5 lakhs of rupees. That's the limit that has gone up. And 194 BC, the it says that the portion beginning with the word at the rate or ending with the word payee in any is any other person. The word rate of tax at 10% is amended accordingly. Now there it has been omitted. The 206C is omitted in this case. And 194S, section 203A and 203B, the word figure of 203A shall be substituted. That is that is what AB is not there, only A is maintained over there. And 206AB is omitted. 206C amendment is that timber, that is this what we call as TCS provisions. 2.5% rate is there. That has been made 2%. There the reduction of tax TDS amount is there. And we'll go to subsequent omission. 260CA is gone. That's all. These are the 190 provisions. These are the few changes. In short, wherever the limits were 5,000 rupees, they have gone to 10,000 rupees. And wherever it was per transaction, people are talking about, it is now made for the year, entire year, whatever transaction, that is being covered in this aspect. Okay. Is it clear?
Hello, am I audible?
Yeah, you are audible.
Regarding the 194T.
Little louder, little louder.
Regarding 194T.
194?
T.
B, yeah.
T for Tamil Nadu.
T, okay.
TDS on interest to partners and remuneration to partners.
194T. GKL, PQRS.
There's no amendment in this finance bill.
T, there is no change.
There's no change. The
No
query,
change.
how do we compute the TDS on remuneration paid to partners, which will be determined only at the time of completion of audit?
No, I'm not able to get your exact issue.
How do we compute the TDS amount on remuneration to partners, which will be determined only on the completion of the audit?
That's right. This is a precise problem that was being faced when last year these amendments were brought in. They say when the remuneration is paid, that time you deduct. How can you deduct when I can't determine? So we expected that some amendment will come, but unfortunately it has not come.
Because again, there's a penal consequence of making late payment.
So what you take it there as if being paid because a date of credit you take at the end of the year. But what happens there, your problem is that you are going to audit after 3 months or 4 months. By the time the time limit is gone for doing that, and where do you pay this amount? This is a practical difficulty. This matter was even brought to me earlier. So I was anticipating that in this particular aspect, certain amendment will come so that the amount can be paid at least till the date of your audit report or date of filing the return subsequent to audit. Up to that it will come. But unfortunately, that is not figured in this particular budget.
So there's a practical difficulty now for the...
Yes, difficulty continues.
It's
for your organization to make a representation in this regard. And maybe before the budget, before the closure of the budget session, if this is brought in, maybe this aspect will be taken care of. That's right.
Sir, if you can just view the chat box, there are 2-3 questions.
Okay,
One from Mr. Kishore. You'll be able to, or you want me to read out?
No, I will check. I'll check the chat box. Why TDS on? The challenge I have is that under 194T is too low. That's what I explained to you just now. I anticipated some amendment to come in 194T, which has not come. So it is for the associations, the bodies, you take up this matter and say that this particular thing should be introduced to see that, because we are able to determine only at the end of the year, or after finalizing the accounts, not even on 30th March. It will be subsequent period. Only when you make up an account, you will say how much is remuneration to be given, how much is to be given as a share of profit, which has to be taken. So this aspect, this problem is there. This has not been addressed. This should be addressed and it should be taken up. That one. Then 194 I have explained now. I have given the details. And TDS,
Sir,
whether...
a query by Mr. Kishore.
Kishore. 1 minute. Okay.
Amendments on
I'm going slowly. No, amendments of 194 I have already spoken, told you. Then I have got one rebate of 187 available to tax and short. That also I have explained. Kishore Babu's section 58. 58, huh? You're talking about 58 section?
yes, sir. Yes.
Okay, I will come to that. 1 minute.
Sir, can I intervene?
Section 58, na? 58. $158 it is there, but 58 there doesn't seem to be 23.
Sir, can I intervene?
45 is there. 45, 72. What? 58, there is some amendment in section 158. I think he is referring to 158, not 58. Am I clear? Can you clarify? I think who has raised this query?
Yeah, somebody wants to. Yeah, please come up. Probably you can. Somebody wanted to speak.
Kishore Babu has only raised. Somebody wants to speak. Okay, go ahead.
Sir, can I intervene?
One. Yes, sir.
Please go ahead. Please go ahead.
Gurudas, this is with regard to that partners remuneration.
Now keep it near your mouth. I cannot hear. Volume.
This is with regard to the TDS on partners remuneration.
Yeah.
I thought the solution can be every month, whatever remuneration is being paid, it can be debited as drawings to the partner's capital account. And at the end of the year, when you determine the remuneration, you can credit it to the capital account, and whatever the TDS applicable, we can work out on that and pay it off.
See what happens when a person keeps drawing during the year. Now, whether what are you going to treat that drawing to be? So when you're going to treat that drawing to be a part of him, either you take it back from him as an advance or you don't take it back from him as an advance. When you don't take it back as an advance from him, then you treat it as a remuneration to him, isn't it? That's how you go ahead with your practical things. This particular issue was there. When it came up, it was there when 194T was there. This issue was there that how am I going to determine whether this is going to be a profit? If it's going to be a share of profit, then being a partner, what happens? Already there is no taxability in his hand because this is a firm has already paid tax on that. There's no double taxation. I did not have to pay tax on that. Now, this issue has not been addressed in this budget. That's what I'm trying to make this point on that. That is it. And accounting, you may, whichever method you may follow in accounting part of it, you may take it as an advance given for some purpose or some drawings which is given to him at a later point of time. Will determine whether you treat it as a reduce it from the share of profit to be given to him. That you will see at a later point of time. But all these things can be done only when you finalize the account. So when you finalize the account, there is a time lag. That's where the problem comes.
But,
is it clear? Yeah.
But treating it as drawings, what is the problem?
Now keep it close to your mouth. It's not audible.
Whatever amount is being paid, that will be charged to the capital account as drawings.
Yeah.
And here, when you determine the remuneration to be paid, that will be credited to the capital account. And that
no, whether you put it wherever you want, you put it in a capital account, you put anywhere you want. But ultimately, when you put capital, what is that money?
the remuneration part of it.
It's a part of his money. No? Only you are going to classify it as a profit of the firm that is distributed to him, or it's a remuneration to him. If you call it the remuneration to him, then
once we calculate the profit, and from that we determine the remuneration. At the time of and whatever is the TDS on that, we will pay later interest.
That's right. It's
May last year. And what is determines the remuneration paid only after 31st May. So there will be what is the quantum of the remuneration?
The quantum of the remuneration we can definitely
That is the problem, sir. That is the problem. That is the problem we are asking. That is the problem. You will quantify unless you do the audit.
No, no.
Take place in October also. Yes. So October period stated back in and no Now logic is that by new policies. Now in May, TDC government after 31st May, you will have to know prosecution. That problem is there, so that is why we are asking this. How to determine? We don't know what will be the profit unless we finalize our audit.
See, as simple as that. Yeah, please go ahead, please. Yeah. Please hold the mic close to your mouth because I am not able to hear. Yeah.
Yes, sir. This problem is there with respect to managerial remuneration in the company also.
Yeah.
The profit is determined some percentage of commission or remuneration. Decided on that also TDS is attracted. But that finalization of accounts take place after the end of the year, sometime in September. So already 6 months delay is there. This practical problem already going on.
Yeah.
Our profession now we are facing this, but already companies are facing this problem. There are some case laws wherein we are telling that date of actual entry for closing, though it is 31st March, this is finalized only on 10th September. So 10th September should be taken as date of actual entry and the TDS should be attracted on 10th September. Like that, we have taken a stand and some cases are there decided in favor of assessee and CIT appeal and all in some tribunal. This issue is going on all over where various companies facing this problem already. It is similar to that now our profession is going to face.
Thank you, sir. Let me clarify a few points on this. I am talking about now coming to the decisions of the courts. See, decisions of the courts are always treated as in persona, not in dream. The problem is the moment it is in dream, then there is no issue. You can straight away say that as per this, it is there, matter ends. But they say it is persona. Because what happened? The court goes to the interpretation of the statute on the basis of the facts of the case. So they say this particular, under these facts of the case, this is the decision that is to be given. Now, when somebody is placed on a similar situation, then that person has to go to the court and say that, yes, in this court has held like this, so give me a judgment like that. Then the person can say, now it's applicable to me, because that judgment which is given to you, then you become entitled for the benefit of the judgment, not otherwise.
That is not yet decided. That is what I am telling.
No, that's right. It's a judiciary problem again. But practical problem still persists. That is there.
Sir, you have a question on chat from one Mr. Ganesh. It is
Ganesh,
read as, on the
FDI
chat.
on insurance
Yes.
is now permitted at 100% of foreign insurance companies have high expectations and high rate of claim rejection. Will the cost of policies go up? Are there any measures to keep the cost checked? Now, the question is that all insurance companies, you know, when you take an insurance for going abroad, I'm talking about foreign insurance companies coming here. They all will, while selling policy, they will talk all Indra and Chandran. But when it actually comes to the disbursal of the money, they will quote those things which are written in -4 font. That is there. But I'm not commenting on that particular issue. But the question is that if the foreign investors on insurance are the people who are to pay more money, definitely they will increase their thing by this because nobody is doing any business for charity. So they will definitely see what is the damages that is coming on to them. They will pass it on to the customer at that point of time. So possibility is there. Whatever you expect, that possibility may come. That's there. Ganesh, I'm satisfied. Are you? It's okay.
Sir, can I say something?
Sure.
Yeah. See, people generally go for people where the premium is less, right? Like for example, if we take a life insurance,
Yeah.
let's say my premium is like, let's say sum assured is 1 crore. So
Yeah.
if A insurance company is charging 20,000 premium and B insurance company is charging 25,000,
Yeah.
obviously we'll go to the one which is cheaper, right? So
Yeah.
so I don't think we should be worried, because only if the premium comes down, maybe the insurance business may hit a loss. If it increases, it's good for our domestic insurers only, because anyway, any rational person will not go to any insurance where the premium is higher, right? And nowadays there are so many sites where we can compare also. So life insurance, health insurance and all.
Yeah.
So
See, question is regarding insurance. There are a lot of query. Even if you take a medical insurance and go to your hospital, the hospitals are covered by insurance. What is your insurance amount? They'll make a bill up to that and they'll give it to you. That's a different issue. But question is that when you talk about the taxation part of it, is that when the insurance companies are coming, they're supposed to take a risk. Now, whether they are going to make the payment or not, there is a what insurance regulatory authority there which is taking care of this aspect, is to see that the persons who are the insured's interest is protected. At the same time, interest of the Indian insurance company is also protected to such an extent that there is no undercutting from the other side. Very often I have seen people who have been coming to me telling that, sir, I had taken the insurance while going abroad because it's a compulsory thing that I have to take a insurance. And when I go there, they say it is not recognized. And when I pay the money and come back, this insurance company picks up some point on that and they say that money is not payable to you and all those things and all. So that's a totally a different sector by itself. So when you expect something more by paying a low premium, then possibility is that your expectation will remain an expectation. In reality, it may not turn out to be the truth that you get the entire money back. That is what is the thing. So as far as the insurance sector, the more we talk about it, there's not a much of a thing that really going to come up in that. But as far as you are concerned, when you are paying an insurance premium, you are entitled to get deducted from your business income. That is allowable in that part. That's all. Nothing beyond that in this issue. Okay. Okay. I've made my point clear.
There are two questions in the chat. If you can see, one from Ms. Priyanka.
One from?
Priyanka Jain.
Yeah.
It is read as TCS on purchase and sale of goods is removed. So is it completely removed for all cases?
No. I don't think it's wholly removed. TCS, that is some places it is removed, not all. Where they have put it in par, I'll quote the exact provisions. 205, no, that is 205. Two not six AB is omitted. Okay. 206, which talks about TCS. The timber, a timber or any other forest produce not being tendu leaves shall be substituted. 2.5%. 2% is substituted. And forest produce shall have the same meaning, defined onto this. And second, fourth shall not collect a sum. Provide also nothing contained in provisions of this provision 53 206 AA. 206 double CA is also omitted. Yeah, double CA is omitted. And in C there is a small limit. First forest produce and all those things. Now, what is the query exactly?
Sir, it is read as TCS on purchase and sale of goods is removed. So is it completely removed for all cases?
Apparently, yes. Apparently, yes. Now, that's what I say. Now we have to go into that. You wait for the explanatory note to come as to they will explain, because FM has not talked much on that today. Even the budget is not very clear on that, but the explanatory note will say why this thing has been removed, what is the difficulty that is trying to mitigate, because of which it has been done. That has not come out so far in this situation. So I think we'll have to wait for the explanatory note to come in this regard and then explain.
1 minute, sir. This
Pardon?
206C1H. 206C. 1H is the sale of goods TCS. Corresponding provision 194Q, purchase TDS.
194Q. Q talks about 194Q for the sections other than the transactions of 206H applies shall be omitted. So in other words, they are omitting those particular aspects of that. They have brought, either they are bringing the TCS into TDS provision.
Usually 194Q is the first priority, buyer is responsible. If
Yeah.
buyer fails to deduct, then 206C 1H is applicable in the seller's hand. By chance, if seller makes TCS, then the buyer 184Q is not applicable. Like that, mutually some conditions.
Toggling between TCS and TDS, yeah, in other words, you mean.
Some process amended, I don't know. This is what I wanted. What is happening in the budget, whether any removal of some conditions are there, we do not know.
No, but what is, that is also not clear as to why, whether this 206, which is TCS provision, what is the, in the concept of TCS provision and the TDS provision, why it is shifted from TCS to TDS? Because TDS in a different platform, TCS in a different platform.
The TCS for seller, same goods when bought by other person, it is on purchase.
Correct.
That coming under 184Q.
Correct.
X is selling to Y, X liable for 206C 1H, and Y liable for 194Q. If seller
Correct.
is not complying, then buyer is responsible to deduct the TDS. That is the provision, existing provision.
Okay.
What is the amendment happened? I do not know. That is what I.
That's why the amendment only says that TCS is gone. Now TCS is gone, it's okay. But whether correspondingly brought into TDS or not.
He was telling other than 1H, some scrap, some other class he is telling. That is continued. 1H is removed. That's what I want. TCS removed. TDS 184 remains. TCS also 1H class only removed. Yes. 1H only sale. Remaining other scraps also. TCS on car is there. That is what. Okay, now I.
See, very often it is happening that, see, if you take, for example, the exemptions part, you had one provision called 1023, which was taken for the charitable institutions. This was there. Similar provision was there in 11, 12, 13 also. So now the question is, you take this registration, that registration, you keep running on both. Ultimately, okay, Baba, you hold only one, whichever you want to hold. So such queries will come sometimes. What happens, issues are there when they are brought out, those fine tunings will definitely take place at those points.
Sir, earlier, this 206C 1H was there. That is being totally removed now.
Yeah.
So whenever you sell the goods, the onus is on the buyer to deduct the TDS. That is the clarity that the government has given.
Because that money, that person is going to make the payment.
Correct.
So when making the payment, he withholds and then he makes the balance of the payment.
Correct. So what was missing was, suppose the buyer was a small party whose turnover was not exceeding 10 crore in the previous years and all.
Yeah.
Then the onus to deduct TDS was not applicable for him.
Correct.
It means the seller has to collect the TCS. That was before.
Correct.
Now what they have told, irrespective of everything, buyer only has to deduct the TDS.
Oh, that's right. No, even in respect of the point.
Correct. The 10 crore applies, but the seller will not collect.
See, even in TDS.
Correct. But the seller will not collect TCS.
Yeah. Seller you don't do, because other person is going to pay. That's it. So responsibility shifted to the person who is having the money and is going to make the payment. That's all.
So regarding the 87A rebate on short-term capital gains, you had said that 87A rebate will not be applicable on short-term capital gains since it will go under normal rates.
Yeah.
But in case of shares where STT is paid, it set special rates at 15 to 20%. So the 87A rebate will not be available on such short-term capital gains.
STT is on a different platform.
No, again, it's still a short-term capital gain. You had stated that on short-term capital gain, since it's under general rates, the 87A rebate will be available.
Correct.
But on shares, short-term capital gains, the 87A rebate will not be available, is what I presume.
That is, see, the question is that the security transaction tax is one method of collection for the government to collect the money from you. That is only what dealing in the shares. Now the TDS part of it comes regarding his taxability, which he may pay, he may not pay. So you cut it in advance. Later on, if his amount is collected more, then you pay the money to him, back the money. And STT, there is no refund.
Yes.
While income tax, there is refund.
Yes.
Yeah, let's say.
Sir,
Sir, sorry to interrupt. I think what he was trying to ask was, see, section 111A in income tax says that there is a special rate of 20%.
Yeah,
See, normal capital gains, okay. That
Yeah.
is, you're right, slab rate. What he's asking is, he's not asking about STT is what I suppose. See, since it comes under special rate of tax at 20% where we
Right.
sell shares.
Yeah.
So I think sir is trying to ask, will the rebate be allowed or not under 87A?
See, while talking about the tax rate, the FM said that this is applicable to the normal rates, not for special rates like capital gain. She gave it, it's like capital gain. So apparently what she means that all the special rate provisions, starting from 110 and 11, 12, 13, 14, 15, whatever is the wherever the reduction special rate is applied and all, those don't come under this particular computation for the purpose of working out the tax structure as per the new rates. That's what I understand from this provision. Clear?
Sir, you have a question from one Miss Maithili on the chat. If I
Pardon?
would, you have a question from Miss Maithili on the chat.
Yeah, Maithili on the chat. Section 275 gives timeline based on the end of the quarter, meaning the quarter of 3 months ending in June, September, December, March. Is it not? The Act does not specify. Normally, because everywhere when we use the word quarter, it is the year, 1/4 of an year. The year starts from April to March. So 1/4. So the March ending is June, the quarter ending is June, September, December, and that's what is it. You are correct on that presumption. 3 months and 3 months are part of the 3 months that ending in June, September, and those periods. Yeah. Even if you talk about advance tax, there are quarterly payment. They say the moment they say quarterly, it means it is for the June. June is June and this cycle of June, September, December, and March. That's how it goes. Okay. Anybody else's query? Section 58, Kishore Babu, I don't see any amendment in section 58. What are you exactly trying to know?
Probably Mr. Kishore or would like to unmute himself and talk.
Yeah, let him clarify so that because I don't see any amendment in 58. After section 47, the next amendment is in section 72. I don't see any amendment in 58.
There's a new question
Yeah,
from Mr. Harish.
who is calling?
Sorry, from Mr. Harisha.
Harisha. There is
Yes.
amendment in MSCV payment covered under 43B. 1 minute. 43B you're talking about. Before 13. No, there is nothing 43B. The problem remains for SMEs. That is there. 44AB only it is. BBC is there. BBD is there for non-resident. There is no amendment as far as the SME is concerned in this particular provision here at this time. Okay, Harisha is answered.
I understand, sir. So
Yeah.
I think another question.
Bye. What is the next query?
No, sir, Harisha is answered.
Yeah,
That's it. We are waiting for the next query.
I won't use the word answer, it is reply. It
Yeah,
becomes
yes,
answer
sir.
or not, it's for the other person to get
Yeah,
that
yeah.
replied. But I replied, yeah, thank you. My purpose would be to answer the questions, but sometimes I am also handicapped because of certain practical difficulties. Yeah.
So if there are, acha, there is a,
There's a new message below.
there's this thing asked by Miss Priyanka.
Yeah.
TDS on partner remuneration states accrual or payment, whichever is earlier. If we are not able to compute now, then we can deduct TDS when finalized. Is this stand justifiable for 194T?
See what happens when the problem doesn't come under normal court, when the penalty, prosecution, and all these things start off. No, at that point of time, you say, I have gone this and that. Then at that point of time, you have a stand to say that. That's why, as one of the earlier, one of your colleagues had brought out this matter, that the courts have held in favor of the SSC. The court definitely hold in favor of the SSC because court is not bound by the basis of the Income Tax Act. It talks about, I won't be using that word, but the question is that it clarifies certain points on the basis of what is just. Because always there is a gap between the letter and the spirit of the law. So the court tries to interpret that at this point of time, what is the meaning of that? So for the beginners, I use the word cell, CELL cell. You ask a biologist, he will say it is the smallest unit of a living cell. You go and ask a electrician, he will say it's a cell battery. You call a college student, he will say cell means a mobile. And you go to a prisoner and say what is cell, he say the place where I live. So same word can have different meaning depending upon the facts and circumstances of the case. So the court gives an interpretation on the basis of the facts and circumstances of the case. That is why the judgments are applicable in persona and not in rem. That is where the issues come. So when you find that you are placed in a similar circumstance and certain court has held like this, then those decisions will be binding and you can quote that and get a relief from the court. You have to knock the doors of the court at that point of time. That is unfortunately the situation that prevails on the ground.
Sir, thank you, sir, for your patience, and I hope we were able to address most of the ask by the members as of today now, based on the time available.
Yeah.
Our next speaker, CA Vaitheeswaran sir, is just joined. I will ask my team to introduce him and take it up, sir.
Yeah, it will be my pleasure. Any point, if you want to, if you want to hold a similar webinar at a later point of time, also, you can definitely. I'll be very happy to interact with the cream of the society in front of me. Thank you so much. Thank you all.
Thank you. Over to the office. Yeah, please.
SIRC, I say again, very happy to introduce the next speaker, Advocate K. Vaitheeswaran. Sir is advocate, cost accountant, and company secretary. He has 34 years of experience in advisory capacity as well as through appearance before appellate attributes, authorities, tribunals, and courts in matters arising under domestic and international tax laws, excise and customs, service tax, VAT, CST, GST, FEMA, RERA, company law, and IBC across the country. He wrote the first comprehensive book, VAT in India, when VAT was introduced in 2005, and has also authored books on SEN-VAT credit, books for students appearing in CA final examinations. He has written hundreds of articles covering variety of issues in tax, corporate law, constitutional law, and general laws in both print and digital media. He has recently authored the book Taxation of Digital Economy, published by Oakbridge, covering international tax and indirect tax aspects of the digital world. He is now working on the book on digital personal data protection. He is considered as a specialist in tax and legal matters with in-depth knowledge of the business and tax laws. He has addressed innumerable seminars and conferences on law and taxation across the country and abroad, and is the most sought after legal professional in GST and business restructuring matters. He is also a resource person at the National Judicial Academy and a guest faculty at Sastra College of Law. He is an expert in real estate and technology contracts. He has been recently appointed as a member of the advisory council formed by the government of Tamil Nadu in respect of GST and other matters. He advises clients across the country on various verticals such as manufacturing sector, retail, healthcare, food and hospitality, gems and jewelry, media and entertainment, information technology, education, charitable institutions, societies and clubs, logistics, infrastructure, real estate, shipping and aviation, travel and leisure, banking and financial services, and digital economy. He also advises various associations and chambers of commerce. He is a chairperson of the expert committee on GST, Madras Chamber of Commerce and Industry, and also a member of the General Committee of Madras Chamber. He is the past president of the Revenue Bar Association and past president of the Rotary Club of Madras Southwest. He is also a member of the SIC Indo-American Chamber of Commerce. He is the recipient of the Vocational Excellence Award from Rotary. With this introduction, SIRC of ICA welcome K. Vaitheeswaran sir. Over to the speaker.
Good evening and thank you for this opportunity once again. This is not the first time I'm addressing the CA Institute on the same day of the budget. And this is nice. Hybrid opportunities. Hybrid model is also nice because I had a tight schedule. Madam kept us busy till 1 o'clock listening to the budget speech. And then I had a meeting at 4 o'clock to address on the budget. So I had about a quick lunch and about an hour to prepare a PPT for that 4 o'clock meeting. And then came back from that and did the PPT for this meeting so that I could share some insights with you. Let me not waste time and go straight into it. I'm going to spend a little bit of time on some topics which is not necessarily relevant to indirect tax, but relevant to the country as such. So please bear with me. You ask many youngsters, what are their aspirations? Many of them come with a simple answer saying, I want to go abroad. I want to live abroad. I want to settle down abroad. And then they have their sob story of India saying India is useless. There's nothing wrong, nothing right in India. Everything is wrong in India. If current fails in a meeting, they'll say only it happens in India. As if, or if a screen falls down during a meeting, they'll say it happens only in India. It can happen anywhere. Meeting errors, human errors can happen anywhere. So it's not as if there are India-centric. There are challenges. I'm not saying it's completely rosy and beautiful. But then we need to understand what has India done over the last so many years. We have now become the 4th largest economy and we have crossed UK. So despite our thought process, what is the Western world? We have already crossed UK. We are the 4th largest economy. And we are poised to become the 3rd largest economy by 2030, which is not very far away. And India can boast about a beautiful young population where our average age is only 28. A country which has got a median age of 28 years can achieve phenomenal growth, can achieve in so many sectors you can seek, you will be able to see that. Next, we come to what we call as forex reserves. There's always this theory that, a country can go bankrupt if its foreign reserves are not that great. And we have been piling up on forex reserves. Now it stands at 634.6 billion as on 3/1/2025. And the best part is it's the 4th largest forex reserves in the world and is sufficient enough to cover nearly 90% of our debt as on September 2024. Then there's one ratio which economics do, saying that your external debt ratio to GDP is high. That means as a percentage of GDP, what is my external debt? We have about 19.4%. So a lot of people complain saying that it's very high. So some comparative data is interesting. Singapore is 391% of GDP. UK is 97% of GDP. So I think 19.4 is not so bad at all. And if you look at world over, we are now talking about renewable energy, which constitutes 47% of our total installed capacity itself. And we are now looking at green hydrogen mission, which is talking about 5 million metric tons. These are all climate change oriented, massive initiatives that have been taken by the government. Housing sector, we're looking at a demand which can touch 93 million units by 2036, which is a CREDAI report. All of you are familiar with the GCC, Global Capability Centers. They've really grown big time. The number has gone up from 1430 to 1700. And we have nearly 1.9 million professionals working in GCC, which is a huge source of employment. Cyber security, despite all the drama that is done around cyber security, India's ranking is pretty good. We have about 98.49 score out of 100. And that's a commendable score in the overall global cyber security index. Of course, media will give you all other index and say why it is bad, but cyber security is an interesting index to look at. And I don't think this cyber security is going to be an ordinary area. It's going to be the future of practice also. This segment is going to grow really in leaps and bounds because of the new law of digital personal data protection. The organizers mentioned about the fact that I'm working on a book on that. So in the course of working on the book, I realized that this is going to be a sector which will really triple in growth, because there'll be a lot of scope for cybersecurity enhancements in every segment of business, as well as even NGOs. They may also have to invest in cybersecurity. Inflation is the bugbear, inflation is the worry, and things are pretty good. RBI, IMF have talked about a very low inflation. RBI talks about a 4.8% in finance year 25. Of course, the numbers are always interesting. The actual inflation down the ground may not be 4.8, it may be much more, but that is, at least economists go with the data that is available. Capital markets, our stock market is at a record new high. Our unique investor base has surpassed 10 crore mark in August 24, now at 10.09 crores. Client codes have gone up from 6 crores to nearly 21 crores in December 24. So really, money is flowing into the capital market. Why it is flowing, nobody knows. Why you should stop, nobody knows. Some people are going into the market because of FOMO. You know, they come across a reel while they're watching their social media, and somebody says, I made 30% profit through stock market, and okay, I can also make 30% profit, get into the market. And then now this markets of last few days, you would have seen the crash or the selling in the market. And now people who are recently joined to the market with SIPs are saying, oh, my SIP is not doing well, I want to exit. It's probably the worst decision you can do. You can't exit an SIP. If it's a good SIP, this is the best time to stay in the market. Anyway, the fact remains that everybody is into the market, and therefore this is a data which is critical for government, because they find that this is a phenomenal participation into the business. Now I talk about something serious. The economic survey has identified challenges for the country. And one beautiful paragraph there, I would say the economic survey is a beautifully crafted document worth the read. It's got data, it's brilliantly written, the chronology is phenomenal, the English is awesome. And there's a chapter which talks about elephant and dragon in the room. So when they talk, we normally use the phrase elephant in the room. How do you address the elephant in the room? So the elephant in the room has been identified by the economic survey as the restrictions that are happening around us in the world. Trade restrictions, investment restrictions. Between 20 and 24, really 24,000 new restrictions linked to trade and investments have taken place globally. And this has impacted global trade, which has slowed down. So a lot of people talk about the economy slowing down and trade slowing down, exports being sluggish, etc. One of the key reasons for this is not only the cycle, but also the fact that changes are happening worldwide. There are a lot of restrictions, country-wise restrictions, product-wise restrictions, non-tariff restrictions, non-tariff barriers, tariff barriers, all these keep coming up. Again, as I said, beautiful English. New risks have surfaced in the growth of IT and professional services in the recent changes in global policies following key electoral outcomes. As euphemistically put, saying that based on elections won in different parts of the country, policies change on immigration. So that's between the lines. In Tamil, you have this Konaru, Telugurai, Velakavarai. Velakavarai, Telugurai for this is that it is between the lines elections. And then there's a lovely observation saying that competition for investment is not only with other emerging economies, but many economies are also closing their doors by offering incentives to stay back, make investors stay back. See, this is a two-way sword, double-edged sword. We talk about Atmanirbhar. and say that, India is great. We have to manufacture everything in India. We shouldn't buy from abroad. The other fellow also will put such policies, no? So just like how you like to manufacture in India, somebody would like to manufacture in Vietnam, somebody would like to manufacture in Canada, somebody would like to manufacture in US. So that country, that state will give incentives, Philips policies to ensure that somebody manufactures there. So it is inevitable. So when countries start giving their own citizens or businesses incentives and policies to make them stay, why would they go out? If they don't go out, where is the investment coming from? So that is a big challenge, has been beautifully identified in the report. So these are some of the restrictions that the economic survey has flagged. Non-trade is about 114, security-based. Now you have, even if you look at the ESG, which our institute also talks about regularly, and a lot of people specialize in the subject and try to understand ESG. ESG is in one form of a restriction which has been justified by saying that, look, this is carbon credit, this is carbon related taxes, this is climate related taxes. Anything which will impair trade through a form of a compliance, or through a form of a condition, or through a form of a procedure, or through a form of a tax will be a restriction, because it will impact global trade. And there's an excellent para on China, where many of us get enthusiastic about the fact that we abhor Chinese goods. We will not buy Chinese goods. All this drama which we do, but the reality is very, very different. The report recognizes the fact that China is a massive manufacturing colossus. They are unbelievably growing, unbelievably grown, unbelievably big in automobile, mining, refining, etc. So how much ever we say, we are still dependent on certain key materials from China. For example, we're talking about solar. We're growing big time in solar, but some of the key elements for solar comes from China. So in fact, aptly put, as the world navigates the challenges of climate change, the road to energy transition runs through China. So it's a very difficult choice for a government or a politician or a diplomat as to what do you position yourself with China. You can't be, you have a very hostile approach with that country. You need to be also trade partner with it, because your raw materials are still critical. Your materials, your nickel, cobalt, graphite, lithium are critical, because you're pushing EV everywhere. So everywhere, everybody buys electric vehicle thinking that they have made a great change to climate change. But we don't know the other part of the story as to where these minerals come from, or what kind of labor conditions exist in those mines when you talk about mining. So it's always a package. Some is good, some is bad. We'll have to look at that. But the dominance of China is something which we cannot brush away. We have to respect and recognize so that we can plan our policies and shape our policies accordingly. Now, by now we are familiar with this 2047. Last few budgets we have heard this number. Why this 2047? Because 100 years from independence, 1947. In 2047, we'll do this. In 2047, we'll become this. In 2047, we would have become this. 100% confidence. Because whoever is listening today, at least at our age bracket, may not live in 2047. So, யாரை கேள்வி கேட்க முடியாது. நீ சொன்னியே அன்னைக்கு 2047 developed ஆயிடுவோம்னு சொன்னியே. நாங்க இருந்தா தானே. So it's always advantageous to give a benchmark, 25-30 years away, because nobody can ask you questions. If you see an entire budget, next 5 years we'll invest, next 8 years we'll do this, next 3 years we'll do this. We'd like to know what you're going to do now. So this 2047 Viksit Bharat, the report itself says, boss, you want to become Viksit Bharat is, don't get confused with this Vik Sidex and all. Viksit means developed Bharat. Okay. So developed Bharat we can become in 2047. For that, the report says we need 8% growth for the next 10 years, for which we need to achieve investment rate of 35% of GDP. Manufacturing sector should grow like develop further. We have huge investment made in technologies such as AI, robotics, and biotechnology. And then you have to create new farm jobs, non-farm jobs, and achieve 100% literacy. So every budget is structured based on what is identified in the economic survey. So the feeling you get after reading an economic survey is that you will see certain specific steps as policies or measures or announcements, which will be tuned to address the issues identified by the economic survey. So I was looking forward to the budget in the morning because I had read the report when it came yesterday. So I was hoping for some of these big ticket announcements with reference to manufacturing and AI. Yes, there is a lot of chapter devoted on AI, but then it does not address what is really to be addressed as far as investments in AI is concerned. And manufacturing, we are again going back to the same philosophy of saying that we will have to do more manufacturing in India. We should become Atmanirbhar in pulses. So, all those kind of, jargon which is thrown in everywhere and saying that we should do these things, etc. But may not meet this key point which has been addressed by the Chief Economic Advisor. So we have talked about Atmanirbharta in pulses. We have a national mission for high-yielding seeds. We have a urea plant in Assam. All this is supposed to help the agriculture. MSME, major changes, enhancement of investment limits to 2.5 and turnover limits to 2 times. So the number of MSMEs are likely to grow. They are recognizing finally that MSME is the key backbone of this country in terms of manufacture, which is true. But the problems of MSMEs are not addressed through the budget. What are the problems of MSME? Liquidity. 45 days, is it real or not? Theoretically, as per the act, you're supposed to make the payment in 45 days, is it real or not? The income tax amendment in the context of MSME. The GST challenges faced by MSME because they have to pay the GST upfront, but they did get the money 6 months later. None of these are talked about, except they're saying we'll enhance credit availability, we'll increase credit cards, we'll create fund of fund for startups. Those are all macro level incidental, but the actual ground reality challenges faced by MSME has not been addressed. Looking at investment in people, it's a very interesting paragraph in the budget. They're looking at how we can invest in people. And one of the ideas is that let us create 50,000 labs in schools called as Atal Tinkering Labs. I'm reminded of that Amir Khan movie, and then finally Vijay also acted in that film, that 3 Idiots based movie, where you give a lot of innovations and ideas. So can we become the next IT AI player in the world at a cheap cost? You have this, what is that, deep seek that is going around, which has captured the world's attention, which has also affected the global markets and hurt quite a number of shares and shocked a lot of people, saying that, can you really make it at this cost? They made it. So can the next AI come from India? Can it be something remarkable and we can achieve things? So for that, innovation has to happen at various levels. School level is ideal. Digital form of language in schools, whereby all Indian languages are available in digital form in schools. That's a good idea. They're creating a center of excellence for AI, but for education. And then you have this beautiful theory. Let us do infrastructure big time in PPP. This is my 34th year of practice and probably my 30th year of speaking on budgets. Every year I hear this PPP. Every budget says we will do PPP, public-private partnership. Private fellow is not interested, public fellow is not interested, partnership doesn't work. And after that PPP, they go to arbitration. And in the arbitration, there is a dispute. And the arbitration dispute does not get so easily solved. It takes years or months. And then an award is passed. Assuming money has to be paid with the government or the government body or a local body, etc., they refuse to pay the money. Then they announce a scheme saying that awards which have not been paid will be settled through the scheme provided you take a haircut. That haircut you are willing to take, then also the scheme money is not coming. Where will the investor have confidence if you have this kind of treatment for a PPP? So PPP, so there are very good ideas. These are all brilliant ideas, but ground level, are you allowing them to work? Are you ensuring that a contractor can be confident that if he has put his money, he'll be able to take out his money? Are you giving the confidence that if he has provided services, we raise the invoice, his money will be settled, his bill will be paid? Are you giving that degree of confidence? If you give that degree of confidence, things will automatically change at ground level. Jal Jeevan Mission, an idea to give water, potable water across all villages and pipelines. It is a roaring success. Therefore, they're increasing it till 2028. We're also looking at energy expansion through nuclear energy. And of course, UDAN. UDAN is your regional connectivity. It's a roaring success from a customer perspective. Why? Today, you can go anywhere in India. You have to just look at Google and it will give you a nearby airport. Places which you never know now have an airport. Therefore, airports have been created. Flight connections exist, 1 stop, 2 stop, but you get a flight connection. So UDAN has been really great. But the problem is we have only one airline. And that airline has got problems. So we are stuck with one airline which has got its own challenges. Whereas it will be a roaring success if multiple airlines could come into it. So economically, it has not been viable. But for some reason, they feel it will work and they're spreading UDAN further. Going to more and more new cities. Good for travel. Tourism, 50 places have been identified for exploring and expanding tourism. They're planning e-visa for visitors to these locations. They're also looking at an e-visa waiver for certain segments to ensure that tourism grows. Exports, they want all exporters to come into a new platform called as Bharat Trade Net. I have no problem with coming into a platform. Please keep the platform working condition. We have seen enough platforms, GST platform, income tax platform, MCA platform. All these platforms have problems. So if you're having a technology platform, please ensure it works so that people don't struggle. Warehousing facility for air cargo, that's a good idea. It will again improve the trade. Then one interesting point I noticed in the budget is reforms has been identified as an engine. And very clearly she said new tax bill next week. So finally date is done. Date is done and dusted. Maximum next week can be 7 days. Okay, it can't be next year. So we will see an income tax act or income tax bill 2025 next week. A lot of people have asked me saying that what is this drama? They could have done in this budget itself. They can't do it in the budget for multiple reasons. One, entire 1961 Act has to be replaced. And that's a big exercise. Therefore, ideally, it must be an Income Tax Amendment Act or a new act, which will repeal the old Income Tax Act with repeal and provisions. It can't be part of a budget amendment. Second, maybe the election code is also in play. You have elections in Delhi. While a budget may be okay, a phenomenal change in income tax amendment may not be possible. That could also be a reason. And third thing, probably it'd be difficult to communicate what all is there in the income tax changes through one budget speech. It will mess up the whole thing. Because what she has said is 50% of the provisions will go. So imagine 1961 Act. Already this book of 1961 Act, all of us are, finding it difficult to carry without having some shoulder problem or hand problem. And then the rules have also become voluminous. Some of us have started using technology, but then these rules are outdated and web is not that great. Therefore, you have to keep on tracking the amendments and watch it. Now, if it is going to shrink to 50%, fantastic news. But then old fox, old experience, the more and more you try to make things simple, it will be complicated. So let's see how it goes. I hope they don't make the act simple and make the rules bigger. I hope they do both together in a simpler format. Let's see, wait, it's too early days. But one thing is clear, all of us have to study again. So the old 1922, we had forgotten, 1961 Act, we got used to it. We got so used to the sections. Now we have to get unused to the sections. It's a good journey of unlearning, like the Companies Act. We got so used to sections of Companies Act 1956, and then 2013 Act came. At least GST is different because it repealed the old law completely and started a new law. But Companies Act is virtually the same set of provisions and different names and sections. But we learned it. So I guess we'll do the learning exercise again. For youngsters, it is fantastic. You can learn the new subject afresh without the past. But as I say, all the past will still be relevant because they'll use the same kind of provisions in different names. Therefore, old case laws will still be relevant. But at least an exercise can be easily done in the new Act. FDI increase in insurance from 72% to 100%, 70% to 100%. Post-payment banks to be expanded. Fast-track mergers, good idea. Currently, holding company and wholly owned subsidiary, fast-track merger is permitted, subject to certain conditions. Today, mergers take a long time in NCLT, 6 to 8 months. It creates other problems because by the time your effective date changes, because of the delay in the process, by the time the order comes, even though you don't intend it, the merger is effective from past date. If it is effective from past date, you have to give accounting entry, accounting standards impact in your financials. And when you do that, that doesn't reconcile with your income tax return and GST return, and therefore they issue show cause notices. So all these challenges are going on, even though it's a normal merger, which just requires a stamp of approval. High-level committee is being formed. They have to give a report in 1 year regarding all regulatory except financial matters, where you can go and tell them there is form required, there is permission required, there is license required, there is NOC required, there is clearance required. We don't want all these things. So that committee can look into it and probably recommend solutions. Your earlier speaker on direct tax would have told you about how the Big Bang announcement came with reference to 12 lakhs. And then FM also said that on the direct tax fund, she is losing 1 lakh crore, probably some amount she specified because of this amendment. So I was wondering, oh, that much of loss, then collections will be low. But look at the collections, the estimates. For personal income tax, the direct budget estimates is going up from 11,98,000 to 13,47,000 crores. So personal income tax collections are going to go up. How is it going to come from? Where is it going to come from? Is going to be better assessment, more assessments, more notices? Don't know. Similarly, corporate tax from 9,80,000 crores is going to 10,82,000 crores. So no big changes in the act, no big rate of tax amendments, but still this much collection is in. Either they expect country to do well when the economic survey is doubtful about the country doing well because it's projected the growth at a very low 6.5 something only, not at 8. So we need to see how it goes. And GST they've estimated from 10 lakh 66 to about 11 lakhs 83,000. So everywhere they're expecting the economy to do well. But I'm not surprised because this government seems to be on track as far as estimates is concerned. They've very rarely read down the estimates. For example, if you take, last 5 or 6 years, you would see they would have said budget estimate 100, revised estimate 120, collections will be 120 or 125. So they're somewhat meeting their targets. And let's see how they do it this time. Now, quickly going into the specifics of amendments, indirect taxes, customs. The Customs Tariff Act is being amended for rate rationalization. You have to understand that the Customs Tariff Act is the main act which lists out all the commodities, which sets out the tariff rate as per the act. But what is the effective rate is not as per the tariff, it will be through notifications. The notifications give a reduction in some form, conditions, etc. That is why it's called effective rate. So somebody new will just think jewelry is 20%. Jewelry is not 20%. So, a particular item could be at a very high rate in the tariff, but the effective rate could be a very different rate. So you need to understand that you need to read both together. So tariff amendments have happened. They are not the impact of changes. The changes are through notifications. Some tariff rates are effective from 2/2/25. Wherever an amendment has to be coming into force from tomorrow, after the date of the budget, they will notify in the Provisional Collection of Taxes Act, which is what they've done. There are some decrease in tariff rates effective after enactment of finance bill. There are changes through notifications from tomorrow, which the FM also talked about. Wet blue leather, that is hides and skins, are exempt. Cobalt powder is exempt. Waste and scrap of lithium-ion battery is exempt. Lead scrap is exempt. Then this theory, again, we don't know how far it's true, how far it is working on ground. Let's tax the output that is coming from outside India. Let's exempt the input that goes into making the output so that people will make it in India. So the idea is don't tax that, tax the product, but reduce the root duty on the material that goes into the product so that people will manufacture in India. That is why inputs and parts for open use and manufacture of television panels is exempted. Open cell for flat panel display reduced. Capital goods for manufacture of lithium, you have exemptions. And then you see some interesting items. Motor cars of so-and-so capacity reduced from 100 to 70%. Motorcycle reduced based on engine capacity. Why suddenly motorcycles are having a reduction in customs duty? Trump has come to power. And Trump in US has been talking about tariffs. And his sore point has been that India has been taxing Harley Davidson at a very high rate. So Harley Davidson is the biggest bugbear as far as policy making in US is concerned, because they have complained saying that India has got high rates. Probably to ensure that these things smoothen out, the budget itself, they reduce the rate of tax for motorcycles before any action is taken at that end. Social welfare says, this is my guess, I could be wrong, but typically I don't see any other reason why they would put this. Social welfare says exempt for 25 items. Agricultural development imposed 30. This is what is called as balancing. You exempt here and then you increase here. Exemption and concession to continue for certain items. And there are certain minor changes as far as import goods are concerned. This is a good amendment. In customs, suppose you import something and then you have doubt about valuation. Our officer has got a doubt. He says that, sir, you are calling this as a cup. Is it a cup or is it a container? What is it made of? You say it is ceramic. He says, no, it doesn't look like ceramic. It is made of something else. Let me give to a laboratory for testing. You tell him that I'll get the detail from the foreign party. All this will take time. So goods will be provisionally assessed, kept, allowed to be cleared. So you can clear the goods on payment of provisional assessment, whatever value, duty, etc. It will await that information that comes from abroad or from local reports, and then it will be assessed in final assessment. This is section theory. Reality is that final assessment will never happen, because provisional assessment, once you go, people forget about it. And if it's a higher rate of duty that you have paid, the department is not going to bother. If it's lower rate of duty paid, then also they don't need to bother because they have other work which to do. So now section 18IB provides for time limits, saying that we want to finish this final assessment, which is a welcome amendment. This is another welcome amendment, new section 18A. You file a bill of entry. You have declared something as value. You have declared something as rate of duty. You clear it, go home, and then somebody tells you, your consult tells you, Barayar, you put it wrongly. This is not the correct classification. It actually is a higher rate of duty. What do? People think that we'll wait. We have got out of customs. Let him do audit, let him find out. He will do audit 4 years later, 5 years later, find out, and then demand interest and penalty. Rather, if you're able to discover this, is there a window for closing this? That window is 18A. Go and say, yes, this is a mistake which has happened. I'll revise my entry, pay the duty and interest as applicable, and close it, no penalty. Of course, investigation cases will not apply, audit cases will not apply. Moving on to GST. Somewhere in the budget speech, she mentioned something about GST, but in reality, there was nothing which I could see in the speech about GST. Economic survey, last year, if you see, was rosy topic about GST, how GST has reformed this country, how GST has improved collections, etc. This year, nothing. No talk about how GST collections are doing, analysis collection wise, nothing has been happening. Maybe they got bored out of it, or they thought that this is a routine, we don't want to talk about it. How long can you talk about it? Could be whatever reason. But as far as amendment goes, fresh headaches are starting in the form of ISD, Input Service Distributor. Last year, they made the amendment saying it is from 1/4/25. They further made amendments to implement that from 1/4/25. So now the question before any company would be, should I do ISD or cross charge? Currently, what is happening, if you do cross charge, you get a show cause notice for not doing ISD. If you do ISD, you will get a show cause notice for not doing cross charge. Now, the section is quiet on cross charge. Section only says ISD. Does it mean ISD is the only solution or cross charge still an option? So people are debating. The verdict is still not there. So depending on each business, the answer can change. So depending on facts, advice can change. Some items ISD could be mandatory. Some items cross charge option could still be available. Some costs could be relevant only to the head office and not at all necessary for passing on to the branch. So these are all we learn as we go forward. There's a definition of local authority. That local authority did not define local fund or municipal fund. So now they've defined it specifically because they were getting into issues as to what constitutes a municipal fund or a local fund. You're aware of this gift vouchers. When you get a gift voucher, somebody gives you a gift voucher, you can go to the shop, present the gift voucher, and to the extent of the value declared therein, you can encash the item. So in reality, gift voucher is nothing but a consideration which you surrender in lieu of the item that you're purchasing. Madras High Court said, if gift voucher's card is for a specified item of jewelry, then the tax is payable at the time of its issuance as there is a supply. Tax is payable in view of section 12(4)(a) at the time of issuance of such gift vouchers. If there is no supply, no transfer with the meaning of so and so, so and so, then time of supply will get postponed. So a lot of issues around this judgment and how you deal with vouchers. So there was a latest circular last year, 31/12/24, which kind of settled the issue on vouchers. So they said whether voucher is covered as a prepaid instrument recognized by RBI or not, voucher is only an instrument, and transaction voucher is not supply of goods or supply of services. Excellent circular. The underlying goods for which the vouchers are issued may be taxable in GST. Trading in vouchers may not be liable to GST, and all the additional services will be taxed. So this is a very good circular which kind of explained the provisions. They went one step further, saying that let's ensure that the law also matches this, and therefore 12(4) and 13(4) have been amended to ensure that it is in line with the thinking of the government as far as vouchers are concerned. Now we come to the famous safari retreats. You are all aware of the Odisha High Court, which decided that you need to read down the provisions. ITC should be available. It was in the context of a developer who had engaged contractors, constructed, and his intention was to let out the mall. So he claimed ITC. Department said section is against you. So court read down the section. Matter went on appeal. Extensively argued from both sides, elaborately argued. And after a long time of period of time, the judgment finally came. Supreme Court very clearly said the expression plant or machinery used in 17(5)(d) cannot be given the same meaning as a plant machinery defined by the explanation. The question whether a mall, warehouse, building other than a hotel, etc. can be classified as plant with the meaning of so and so, they gave a factual question. Ultimately, they gave a saying that it's a factual question to be determined by the lower levels as well as wherever it's pending. But they gave a theory based on what is called as functional test. If something can be demonstrated as something functional for your business, even though it is a building, it can qualify as a plant and therefore be eligible for ITC. So in effect, they're saying a building could metamorphose into a plant under certain circumstances, which is totally based on facts. Para 52, 53 of judgment are all relevant, but para 32 is very interesting, which is, in my view, still open. Para 32 of the judgment talks about what is own use. Because if you look at the section 17.5, way it is structured, other than own use will be the words used. Therefore, if I can demonstrate that what I'm using is not for my own use, but for other use, then I'm eligible for credit without referring to the judgment. By the section itself, I'm eligible for credit, which is what the court explained, saying what is the scope of own use. They said that if you are constructing a building for the purpose of letting it out, it is for other use. It is not for your own use. It is meant for the use of the lessee. And therefore, you're eligible for credit based on the first principle of the section. Second reason was the building theory, function theory, plant theory. Now, what has happened? They've amended. So they amended 17D to substitute plant and machinery as against plant and machinery. So they're saying that this is what our intention was from day one. This is what we wanted to do. And therefore, this is retrospective from 1/7/2017. I don't know whether you've read my article on this topic, where I've given at least 4 or 5 instances where Arun Jaitley, former finance minister, then our Honorable Prime Minister, as well as Nirmala Sitharaman Madam as FM, have talked about how this government will never do retrospective amendments, how they'll be only prospective if there is change. All the drama is there on those things, but reality is they have done retrospectively, nullifying the effect of the judgment. But in my view, it may not be the end of the story. The judgment has been nullified only in parts. Even if it dehorse the judgment, one can take the benefit if they can read the section, but totally depending upon interpretation and facts. Credit notes. A credit note is a commercial document between two parties. What is a credit note? I raised an invoice on you. I've raised it for 1 lakh, but then you have to give me some money. Let us do some adjustment through a credit note. So I'll give you a credit note for 20,000. So my 1 lakh becomes 80,000. Or you don't have to give me 1 lakh, you have to give me only 75,000. So I'll give you a credit note for 25,000. It's an accounting adjustment. Unfortunately, credit note crept into law through GST. There's no necessity for credit note to be mentioned even in law. But they started mentioning credit note in law and said that you raise an invoice, you paid GST based on the invoice, you raise a credit note, value has come down, take the benefit of the excess ITC pay, excess GST paid against some other transaction, subject to ABC conditions. But it was all confined to post-supply discounts issued through credit notes. Now they said all credit notes, which means any credit note issued, now you have to go and look at the recipient and see if he has reversed the ITC, if he is a registered person. If so, if he has reversed the ITC, then there's no issue. If he's not reversed, then you have problems because your liability will be questioned. Now, this is one, I would say, SOP. What is the SOP? There is one authority called CBIC, board, very powerful body. Then there is an all-powerful body called GST Council. Then the majesty of law is reflected in the parliament. So GST Council meets, decides, recommends, law is amended. Board implements it through various provisions, notifications, circulars, etc. There is a new fellow in the market called as GSTN advisory, team GSTN. He will regularly give you letters. Do this, do that. If you don't do this, this will happen. If you don't do this, this will happen. So he brought in IMS, Invoice Management System. Nowhere in the Act there is a mention of Invoice Management System. Nowhere in the rules there is a mechanism for Invoice Management System. But he said, Invoice Management System optional from October, mandatory from January, from April, this, that. And if you don't accept it, you cannot file your return. You have to accept all. So what does this mean? This is what is called as putting the cart before the horse. So you do GST and advisory. Then you realize that, oh no, there is nothing in the Act for this. Then you have a GST Council meeting. Then you decide that we'll amend 38. And then you go to the parliament and bring a 38 amendment. So that is how this has been done. So IMS system has come through section 38 and rules will also follow. Now IMS, whether it will work or not, I don't know, because IMS is nothing but your old GSTR2. What was the old GSTR? You file GSTR1, it will be seen in GSTR2. He accepts, he files GSTR2, it will be seen in GSTR1A. You accept, both of you file GSTR3 and live happily ever after. This is what was contemplated. Nobody lived happily ever after. GSTR3 collapsed. GSTR1A never happened. GSTR2 has come in some forms. 2A has come in some forms. So now they are bringing back IMS in a different name. All those 2 and 1A is coming back through IMS. Now this has practical challenges. One, what happens if the supplier simply raises one credit note? Or supplier puts an invoice in my name, in my GSTN name. When a paduthalan soltu, if you put your GSTN name and raise one invoice, it will come in your portal. The moment it comes in your portal, this will say you have to take ITC. No, it has come in your portal, you have to take ITC. If you don't take ITC, you will get a question. If you take ITC, you will get another question. So it's going to be real problem where you have to monitor, look at systems, how much can you do? And you have to look at credit notes. If you don't accept credit notes, he is in trouble. If you accept credit note, it has to be a genuine credit note. If you accept credit note, you are recognizing that the invoice was correct. If the invoice itself was wrongly raised, and that's why he's raising credit note. If you acknowledge the credit note, you have to acknowledge the invoice, which means your figures will get into trouble. So there are going to be very serious accounting and practical challenges around this, is my humble opinion. If there is an order, tax is there, pre-deposit 10%. If there is an order where the only penalty is there is no section for pre-deposit. Hitherto also there was no section. Old also there was no provision for pre-deposit or penalty. There are case laws which says that when the statute does not provide for it, you cannot insist on a pre-deposit. Adepudi, we'll put penalty. So they said we'll provide for a pre-deposit of 25% under 129.3. Now they modified that everything is now 10%. So penalty appeal also you have to pre-deposit 10%. Unlike tax, where there's an outer limit of 20 crores for pre-deposit, they forgot to provide for penalty pre-deposit max. Probably they'll, by the time the act comes, they'll change it, provided somebody points out. Track and trade mechanism. What is track and trade mechanism? New 148A. They will notify certain goods. As per these goods or class of persons, you have to put a special marking on those goods. This will be a unique identification mark so that the goods will be tracked through the entire supply chain. I don't know what goods they're going to look at. Imagine if they're putting on a construction material. Till how long will you track? After it goes into building also, will you track? So there has to be some logic or reasoning on this. If they notify for cigarette, how long will you track till the fellow drops it? So I don't know what is their intention here, but they seem to think that these are all evasion prone. This is the obsession with the government, that there are some items where there is huge evasion and we should get law stricter and stricter and stricter and stringent. On one side, they say we are partners, you are nation builders. You are also part of you are contributing so much. Thank you so much. You are great SSCs. Others saying we don't trust you. We'll put a mark. Karambuli Assembly will put on all the products and watch you. Like, there is this latest corporation provision in Tamil Nadu. In Chennai, corporation has talked about dogs to have one chip to identify that they are not, can identify all the dogs. Next, what? Personal income tax. Somebody says, I'm a resident of India. Have you spent 182 days in India? I have spent 182 days in India. What is the proof? I spent here and there. This is my passport, etc. No. From now on, you must have a chip in your body. So we'll know from your GPS tracking whether you're in India or outside India. So there has to be some level of trust. So this is a classic example of trust deficit. This was an unnecessary controversy, which is now sorted. If goods come into an SEZ, it is already not taxable under customs. It's already treated as a foreign territory. So from SEZ, if it goes to any person for the purpose of export, it should not be taxed at all. If it goes to DTA, what are the consequences? So finally, they have realized that, and all the disputes have been solved by an amendment under Schedule 3, retrospective. And then, as usual, one clause saying that in case you are one Mundrikota who has paid the tax on this and not contested this, so be it. We won't give you refund. So those of those fellows who have not paid the tax and contested will get relief to the amendment. Those of those fellows who have paid the tax for it will not get any benefit. With that, I come to my last part of my presentation on indirect taxes. Thank you very much for a patient hearing. It's open for questions. If there are any questions, just somebody can read read out or see some chat. I don't know whether it's earlier slide or current chat, but if you can point out, if you can put your hand and ask a question, yes.
I think, sir, we have people who are there in person, so they can also ask questions, and the others who have joined online can post it on the chat.
I don't see any questions. So if there's nothing in the hand, the organizer can close the program.
Yeah, yes, sir. There are no questions in the chat as of now. Any other questions from people who are in person there? There is a question in the chat now.
Yeah.
I think it reads as, please repeat ISD provisions.
So as far as ISD is concerned, let me give an example. I am a big factory. I have a factory in, let us say, Tamil Nadu, Tirunelveli, and I have a corporate office in Chennai. I also have registrations in Andhra Pradesh, Telangana, Maharashtra, Karnataka, and Rajasthan. I have factories there, branches there, etc. Various places of business duly registered, distinct person registrations. Now, hitherto, what I was doing, I will buy here, I would take credit here. Being a corporate office, I will buy a lot of procurements of goods and services which are relevant to the entire business. Take ITC. To the extent I feel that the other units may be using these benefits, I may do a cross charge, or I may not even do a cross charge. Now, what the law wants me to mandatorily do is that I should take a separate registration called as an ISD registration. And then out of the various box of input service which I've procured at Chennai office, corporate office, I must distribute to all the locations based on turnover, based on certain parameters. So I would distribute through what is called as an ISD invoice. Based on that ISD invoice, those locations will take the ITC. So the idea is that the ITC gets equitably distributed across all my arms and tentacles across the country. The real idea is something else. The real idea is the collections to the state government and the money that comes from the system is also based on block credit, reversals of ITC. So if the entire credit is blocked in Chennai, Tamil Nadu gets the money, is the perception. And therefore, even ineligible credits may have to be distributed, seems to be the philosophy behind this amendment. So look at the funny part. You are not eligible for credit, but you may have to distribute. But we'll have to see how it actually works in reality, because the rules have to come in place once all these things are there. And there will be further circulars explaining these provisions, because nobody is clear on this subject as to what are the items you have to mandatorily distribute. For example, if you're running a listed company, you will have a share corporate office related expenses, your SEBI communications, the SEC communications, your stock exchange communication, or your listed compliances. All these things will be relevant to the corporate office brain only, and not relevant to the arms. So do you need to distribute them? And then you have to identify that in services. Let us take a case where you procure, the Chennai office engages me, legal services. and they asked me to fight an appeal in Karnataka. So legal services procured in Chennai, RCM paid in Chennai, lawyer goes to Karnataka and argues the matter. Now they must identify that this is actually meant for Karnataka and distribute this ITC to Karnataka fully. So this is the level of, ISD distribution that is contemplated.
So there's the next question on the chat, which says, what is legal position now to claim ITC on building construction, which meant for rental income purposes?
Going by the amendment, not eligible. Going by interpretation based on para 32 of the Supreme Court judgment and reading 17.5, possible, subject to litigation. So you must have significant appetite for litigation. Then you can do it.
Any questions from the people present? Mr. Ilayaraja, please.
No, ma'am.
Wait a
Fine.
minute.
Yes.
Just to expand on the previous question that was asked, they have just in the amended words, the word or has been emphasized more rather than the word and. So they have not touched upon or given a light or clarity in the own use criteria of the explanation.
That is what I said, para 32.
Yes.
So still open, but then you must be ready for litigation.
So can you just share us some light into what has been achieved by the government in making this amendment?
You are young enough, but I don't know whether you in younger days, you played cricket in the road. I played cricket in the streets. And when I played cricket in the streets, those days we were not well enough. We couldn't afford cricket kit and bat and stuff like that. One friend will be there who will have the bat. So he will come and play with us. But if he becomes out, you cannot declare him out. Because if you declare him out, he'll go home with the bat. And the game ends. Therefore, government is the boy with the bat. If they lose a case, they will amend the law. And that too retrospectively. So that is the philosophy of the amendment. But I think para 32 is still open. We'll have to test it. Not only para 32, there could be even situations where you can demonstrate that what emerges is not even immovable property. That is also open.
So I think this could be the last question. There's one question. Eligibility of ITC claim is subject to GSTR 2B entry now. Is it justified? I have the tax invoice in hand. Any interpretation?
See, there is a theory that 2B is supreme. But then 16.2 becomes otiose if you say 2B is supreme. 16.2 is a bundle of conditions. So I have to receive the invoice, I have to receive the goods, I have to receive the service, vendor has to pay the tax, vendor has to file the returns, it must be there in 2B. Then 16.4 time limit. All this is a bundle of conditions. So it's not only based on 2B, but that's what the department says, that why you have not taken credit. They are now coming back saying 2B, why you have not taken credit. 2B, even your construction bills will be there in 2B. Vendor raises GSTR1, it will come there. See, the portal may not have the intelligence to determine your eligibility on that input service and keep it out of 2B. It cannot, because so many SCs are there. For one man, it will be subcontract, therefore eligible for credit. For another man, he will be a developer, not eligible for credit. For one man, it could be under commercial construction, paying tax, eligible for credit. For one man, it will be 5% residential, not eligible for credit. So portal cannot decide through 2B. 2B, it will show every supplies. You have to decipher, look at the law, what are the conditions, and then claim credit. Ultimately, go by the provisions, you will be fine. I think we can wind up on that note. Thank you, ICI, for giving this opportunity once again. Thank you, madam.
Thank you, sir.